we're at a point now where a small allocation is sensible. In fact, not having a 1% allocation is reckless at this point. Like it's either Bitcoin's either something or it's nothing. Maybe we're at the point now where it'll never go to zero, but it could be a very niche kind of internet thingy that never sustainably stays above 500 billion market cap, something like that. But if it's not that, it's kind of the future reserve currency of the world. So the asymmetry on that investment is ridiculous.
Yeah,
it's absolutely ridiculous. And so you dip your toe in the water, and then you continue to listen to all the podcasts like yours, and and read the books and read the articles and follow the big brains in the space, and you think 1% is not enough. I need more. It's dangerous, right? Because the other thing with investing is that a fundamental tenet for me is that you must look through the lens of opportunity cost with all of your capital allocations. Invest in an emu farm, fine art, gold, property, whatever. If I'm a rational capital allocator, it's just like, well, whether I'm Warren Buffett or I'm Andrew Page, I've got a finite amount of capital. And my goal is to put that in the best place where I have the best risk-adjusted returns. And I'll go anywhere. I've just always been in the share market because they have the best risk-adjusted. Well, they had the best risk-adjusted returns.
Yes.
And so you start looking at it, and then once you realize this is the big sort of epiphany that I think all Bitcoiners have, is that it's interesting, but it's still risky. And then you flip to it's like, no, this is the least risky thing on the planet, and it's got the return potential. So it breaks all the models, in a lot of way. And you realize that any description of risk around this thing is only valid in the context of volatility. And I'm with Buffett on this one. Volatility is not risk. Risk is not knowing what you're doing. Risk is the chance of permanent loss of capital. Volatility is not risk. Volatility is opportunity. And so you go down this path where it's just sort of like you go deeper and deeper and deeper.
Are you in the midst of moving right now? Hey?
Yeah, it's just a nightmare. Yeah,
I can imagine. So because I actually read your post about all the sort of self-serving middlemen in the way of a transaction, and it's just like, absolutely, man. So I guess you've just sort of you bought a property, and now you kind of are in between things, eh? Or are you in the property itself right now?
We're moving there on Saturday, so we're still at the old place. Yes, it's like tomorrow, literally tomorrow, and it's we've got 2 kids. It's a 3-bedroom house. It's a lot of stuff to move. And
oh dear.
It's actually been this will be our 8th move in 11 years.
There we go. Wow.
Yeah. So this is it. We bought this house, so we are done.
Yes.
And it's going to be a relief. We've just got to get through this last hump, and then we're going to be there.
This last hump will be painful as hell, but once you settled, you'll be really grateful. We did. My run rate was a bit better than yours. I did 7 moves in 5 years. So no. And 2 interstate as well. So
you get it. Then I talk to people. It's sort of like, oh, it sounds really bad. And so there's people who have done it. It's like the meme, like those who know, kind of thing. It's horrible.
If you know, you know. No, it's it's absolute hell. And I'm one of those sort of Bitcoiners who kind of will go, I understand all the downsides to property. I've also, studied property, so I know I've worked in property, but it's nice to have your own home. And
here's the thing, right? Like, property has brilliant utility, right? Like, out of all the things that you might demand as a human being, shelter is, it's that Maslow's hierarchy of needs. Like, it's right there. Food, shelter, safety. It's sort of so way up there. But it is so financialized now that it is like, we had to move up to the mountains. We can't afford Sydney anymore. And it's just sort of like just entry level kind of stuff is over $1 million now. So it's sort of, for me, it's not a financial decision. I've been very bearish on property for a long time. I would not invest in it. But even if Bitcoin didn't exist, right? It's sort of like, it's just got very poor fundamentals to it all. But I need a house to live. I'm going to live in this house for the next 30 years. It go to zero, and you can cart me out in a box. I don't care. I've gotten value out of that. I've had that place to live. And frankly, what we're paying in interest is equivalent to what we're paying in rent anyway. So it's kind of, I get that security without, some asshole coming in to like inspect my house every 6 months or kick me out every 12 months because they want to renovate or turn it into an Airbnb. And
Yeah.
it's just sort of like, and the best thing is we could have borrowed a lot less and sold all the Bitcoin, you know?
Yeah. There we go.
And I kind of thought, I can't like that's like trying to choose between your kids. Like you got to send one kid to the gulag. What do you want? It's like, well, I really want like to get out of this renting shithole in Sydney situation.
Yeah.
I really want to keep the Bitcoin at the same kind of time. And then I just kind of thought everyone's talking about this speculative attacks. Like it just dawned on me. It's like, even if you have to get a low doc line, which is what we did, we're just like, I will pay whatever interest. You load me up on the debt there
Yeah.
and let me keep as much of the stack as possible. Which I don't say out loud. I've only said to a handful. I can say it to other Bitcoiners, right? They go, yeah, of course. Why wouldn't you do that?
Yeah,
But
totally.
everyone else is like the most crazy thing in the world. But that's
It's
what's made me
true.
so chuffed, is to get that over the line and sort of keep a bit of that and have that. It's sort of like best of both worlds.
100%, exactly, as I have done. And it is kind of, it's a bit of a contrarian take, isn't it, to say don't bother trying to pay off your debt. Like, as long as you can service it, that's obviously the prerequisite here. I mean, if
Yep.
you're going to, if you're going to be taking out a massive mortgage, you really need to make sure that your income is at least locked in. But
Absolutely.
other than that, it makes no sense to pay it off. And you go like, why would I sell Bitcoin to pay off debt that's designed to literally become easier to pay off in the future? Oh,
Yep.
what a win, man. Well done.
And I've got, I mean, you can imagine I've got spreadsheets as long as your arm. And it's
Yeah.
just like the interesting thing is that the threshold of performance for Bitcoin isn't that high for this to be the superior strategy. It's not like this will work out if Bitcoin 100x's from here in the
Yeah.
next 5 years. It's like if Bitcoin can do on average like 20%,
100%.
yeah, I'm pretty happy with that. And look, worst case scenario, something happens to the income stream or whatever. It's just like, well, I can always, it's not like an all or nothing. I can just
Yes.
sell some down to meet obligations as this is my savings technology.
Yeah.
And when I need to spend my savings for whatever, it's there. But the strategy is not complicated. It's just like any excess money goes over there. When I want to buy something nice and lasting and worthwhile, I'll spend it. Other than that, just let it do its thing.
Let it do its thing, man. That was a great start because it certainly was one of the things I was hoping we could chat about. But yeah, so welcome to the show, Andrew. It's a real pleasure to have you. I've been keen to chat to someone who I regard not as a sort of psychopathic Bitcoin maxi who thinks that everything other than Bitcoin is an absolute shitcoin. It's always nice to chat to folks who've got a different lens. And so that's one of the reasons I was really keen to chat to you. So welcome.
Thank you, Dale. Like, so chuffed to be here. It's great to be in a forum where you can sort of run wild a little bit. We are still at the stage in traditional finance where if you're too vocal with your enthusiasm to Bitcoin, it's got a very tinfoil hat aura to it still, unfortunately. So I tend to sort of try and tone it back where I can, but we're going in both barrels blazing here today, Dale.
There we go. Well, absolutely. And like, I also do appreciate it's, people's perspective who aren't all in. And I certainly think for the average person that makes 0 sense. It's really amongst Bitcoiners who've put in the 1,000 hours plus that you could actually live with that kind of allocation and volatility. But let's start with a quick beginning as to kind of who you are, your background, professional, and what it is that you actually find yourself doing today.
Yeah. The short version is I kind of accidentally landed into finance. Started with one of the big online broking companies when online broking became a thing. So I'm that old. So this is in the late 90s, right? And before that point, you rung up your broker, you paid $50 to $100 a trade, and that's how it was done. And then the internet came along, and I'd actually done a science degree. I did a degree in microbiology, and literally just fell into this thing because I needed to find a job. And it was just at that point where the industry was exploding, and I just got carried along with it. And I started just before the internet boom, the tech boom and then bust. And so I was hooked, right? Because you could just put money into this thing, the share market, and like 5x it in a couple of weeks, because that was the environment that I started. It was the worst time to discover the share market, because it was like, bull markets are dangerous in my humble opinion, because it attracts people that are just there for the quick, easy money. And you have that lesson reiterated to you. It's like, yes, you can do it, and you can do it again. I mean, the obvious conclusion to this anecdote is that on paper, for me at the time, because I didn't have any money, it was a lot of money, and then it wasn't again. And it was a very valuable lesson, but it sort of sent me down the path of, okay, is there any sort of method to the madness? Like everyone, you sort of discover Buffett and Munger and Lynch and, all the greats, and started taking it very seriously. So I've basically worked in the industry now for, gosh, well over 20 years. More recently, I started an online investment club. Really got sick of the industry, where it's just like, it's all sell-side advice is a very yucky industry. And I just thought it'd be better I don't want to do advice, but I do want to engage with other investors, and I do want to find out what they're thinking, what they're buying, why they're buying it. And I'm happy to share my ideas as well. And just sort of have an investment club, because there was really nowhere in Australia at the time to engage with people online. Yeah, there was Twitter, there was Reddit, there's Hot Copper, but they weren't the highest quality sort of forums.
No,
So
noisy.
very noisy, a lot of hard to get to the signal. That being said, there is some great content out there if you can find it. So anyway, I've been doing that for a few years. First came along to Bitcoin. I guess I first noticed it in the 2017 bull market, because you couldn't not notice it. That was that point, every taxi you got in was talking, every Uber driver was talking about it. It was the classic shoe shine boy giving you crypto tips and all of that kind of stuff. And it went to $20,000. And I was doing this podcast at the time, and I was like, this is a disaster waiting to happen. This is a Ponzi. What does it do? All the usual FUD, right? And I just shot from the hip, some supposed expert who, here, I'm new to this thing, but let me tell you why it's a piece of rubbish. And that view was vindicated, right? Because we had that big crash after 2017. It's like, okay, done and dusted.
Yeah.
We've done that. Back to serious finance business. But then, as you know, it kind of like came back and then went away, and then came back and then went away. Now it's coming back again. And I think to be intellectually honest with yourself, and if you are an intellectually curious person, there's a point at which you have to say, okay, something is going on here. I don't know what it is. I don't even know if I want to be involved in it, but something is clearly going on here. Tulips are not coming back, right? Bernie Madoff is not launching a new fund. This is not a Ponzi. Bubbles don't reflate every few and touch new higher and higher record highs. And so you think, okay, well, and then you go down the rabbit hole, as every one of your listeners will have done or will be in the process of going through. And my philosophy has always been with shares and with all investing is, in fact, the platform that we've got is called Strawman. The idea is I want to challenge every investment idea, because my fundamental view is that if I can really stress test an idea and it can stand up to a lot of rigorous, honest criticism, then something's there. And so I went down that path. Okay, quantum computing. Let's look at that. It's like, hey, turns out that's not something to really worry about. Oh, the environmental impact. I like the environment, right? I don't want to get political, but I just like, that was important to me. Like, that's interesting as well. Okay, well, what about this? And it just, every single time I went to sort of throw up a reason as to why it was something to avoid or be careful with, it just one by one got knocked down. And I found that I'd orange pilled myself over a period of, this would have been really starting in 2022, which was good timing, as it turned out. And just once we're at a point now where a small allocation is sensible. In fact, not having a 1% allocation is reckless at this point. Like it's either Bitcoin's either something or it's nothing. Maybe we're at the point now where it'll never go to zero, but it could be a very niche kind of internet thingy that never sustainably stays above 500 billion market cap, something like that. But if it's not that, it's kind of the future reserve currency of the world. So the asymmetry on that investment is ridiculous. It's absolutely ridiculous. And so you dip your toe in the water, and then you continue to listen to all the podcasts like yours, and read the books and read the articles and follow the, the big brains in the space. And you think 1% is not enough. I need more. It's dangerous, right? Because the other thing with investing is that a fundamental tenet for me is that you must look through the lens of opportunity cost with all of your capital allocations. Invest in an emu farm, fine art, gold, property, whatever. If I'm a rational capital allocator, it's just like, well, whether I'm Warren Buffett or I'm Andrew Page, I've got a finite amount of capital. And my goal is to put that in the best place where I have the best risk-adjusted returns. And I'll go anywhere. I've just always been in the share market because they have the best risk-adjusted, well, they had the best risk-adjusted returns.
Yes.
And so you start looking at it. And then once you realize, this is the big sort of epiphany that I think all Bitcoiners have, is that there's, okay, it's interesting, but it's still risky. And then you flip to, it's like, no, this is the least risky thing on the planet, and it's got the return potential. So it breaks all the models, in a lot of way. And you realize that any description of risk around this thing is only valid in the context of volatility. And I'm with Buffett on this one. Volatility is not risk. Risk is not knowing what you're doing. Risk is the chance of permanent loss of capital. Volatility is not risk. Volatility is opportunity. And so you go down this path where it's just sort of like you go deeper and deeper and deeper. And this is where so it's a very long answer to your initial question,
Yes,
but that's where I find myself today, right? Like it's at the point where my wife has a very specific look that she will shoot to me when we're in the company of other people. It's like, don't mention Bitcoin, because I'm just going to launch into it.
That's awesome. I mean, unfortunately, that's one of our traits as Bitcoiners or people who have invested in Bitcoin. It's like, we can't stop talking about it. We're like vegans or CrossFitters.
It's a mind virus.
But at least we make money. So just a quick thing on that sort of volatility and risk piece, because it's something I've chatted to Peter Dunworth about. And yeah, as you say, Warren Buffett says, volatility does not necessarily equate to risk. Just so that folks who don't have that traditional, I guess, equity lens, why do people tend to equate volatility with risk? Because what you would imagine is, you've got these, say, tech stocks. Google is, all things equal, less risky than Nvidia. They would say so. So just talk to us about that piece, because I tend to agree with you, but I think, for the average person, it might not be that self-evident.
I mean, it's all a question of framing. So if you said, Andrew, I've got $10,000, I'm going to go on a trip next month. Should I put it in the market? What's the safest company on the market? It's like, well, there is that is insane proposition from the outset. That is risky. Volatility is very much risk in that framework, because I don't know what the market's going to do. The company could be fine over that period, but sentiment can change, and you're going to suffer a loss. Over longer time frames, you realize that it's just there's a lot of noise in market pricing, and you'll find that volatility almost is an essential ingredient to have outsized returns, because you kind of need to earn those. There's no free lunch in investing, right? If the share market or any asset class had the best returns and the lowest volatility, the very fact of that would cause everyone to buy it, which would reduce the return potential. So obviously, as prices go up, the return potential goes down. So it kind of can't be that way.
Yeah.
And that's why I always think people who have done well in investments like equities or Bitcoin, it's very easy to sort of say, oh, look, that they bought Amazon back in the day, they got lucky. And it's like, no, they didn't. They journeyed through hell to get there. And then even when things started to go their way, they continued to hold. And that is the hardest thing in the world, when you're sitting on a monster profit and not selling. And like you ask, imagine if you bought Nvidia 5 years and look at what it's done since. It's like, yeah, I guarantee you 90% of people who bought 5 years ago aren't holding anymore, because they sold on the way up.
Yeah.
Right. So because of that upside volatility, it tempted you sort of out of it. So volatility is hand in glove with outsized returns, and you want to lean into it. You just want to understand that the price changing potentially rapidly, particularly on something like Bitcoin, which is traded 24/7 globally, it's just, you can't avoid that, but lean into that. It is because of that you have the potential for great returns. It's just, I'm not explaining myself well, but you cannot separate those two concepts.
Yeah. No, I think what you're saying makes perfect sense. I guess what would be interesting to understand from your perspective, Andrew, is how people with an equity lens like yourself tend to look at Bitcoin. My perception of folks who are focused on equity investing, whether it's, in the sort of high growth stuff, or whether it's you're looking for value, there's a common thread that I've noticed where people say, well, Bitcoin is so highly correlated to the NASDAQ. It's basically like a high risk tech stock. Yeah. Talk to us a little bit about that piece, because I'd be interested to see how you, as somebody who's been sitting there, looking at balance sheets, having a look at PE ratios and, doing discounted cash flows and all that jazz and trying to establish, what the value of a company is. Then you bring on something like Bitcoin, no cash flow, no CEO. Like, how do you actually go about analyzing this?
Chris just made the point. Jesse Myers, an excellent one. Something about the yuppie elite, I think the article is titled. It's a great piece. And he talks about the fact that people more deeply ensconced in finance tend to be the last to get it. It's almost a disadvantage if you've got a traditional finance background. And I mean, I'm not being critical of that. Like, there are some really smart people in this space who have long-term track records. They have a real knack of identifying good quality businesses and valuing them and buying them and managing a portfolio of stocks. And, they're very incredibly smart people. But this thing, as you said, it doesn't have cash flow, it doesn't have a CEO, it doesn't have a board, doesn't have a balance sheet. It does not fit into any of the existing mental models. And none of the buckets that you have at your disposal are appropriate to it. So I often get the pushback of, well, it's got no intrinsic value. And I went through that process too. I remember saying the exact same thing. But the mental leap that I think, and most people will, I think, get there if they just spend any amount of time with an open mind taking it seriously, is that, it's not an equity and I shouldn't look at it like an equity. Why I don't value fine wine on the cash flow. I don't value gold on the cash flow. Why is it so hard? But it's just very hard for them to wrap their head around. And I know this was true for me, and I think it's true for most people in the industry, is that you spend your life working in this arena, which is ostensibly just about money, but never do you question what money is. You know what I'm like my whole life working around money, trying to make money through investing, but not questioning what money is. And that sends you down. You have to forget everything right? It rebases everything. I learned more about, again, forgetting Bitcoin itself, just the process of studying Bitcoin taught me so much about global finance and how we work as a species. I mean, money it's a language. It coordinates everything. Without money, I would put money up there with the invention of fire and the wheel and language. I mean, it's a different type of language. Right? Without that, we're in tribes of 500 people. We don't scale. Humanity stops at that level. Money scales us beyond that. So it's incredible technology. It's just that until recently, we just never really had let's be fair, let's not get too conspiratorial here. I think some Bitcoiners get really deep on this stuff. And it's like, well, there are some real basket cases around the world, but by and large, here in Australia, most of the West, it's been a system that's, don't get me wrong, it's got its problems, but it's worked reasonably well. We sit here today with a standard of living that our great-grandparents couldn't fathom. Right? Couldn't imagine. So it works pretty well. But then you realize it's actually what is it about money that needs to be true for it to work as best as it possibly can. And then you realize that Bitcoin ticks all of those boxes. And then you realize, actually, this is the point of the pyramid. Like, there's no proving beyond this. Like, Bitcoin is a one-time invention and it's the last time invention. Like, no one's reinventing steam power, right? Yeah. Like, no one's reinventing electricity. It's done. It's out there. Yeah. So I think to really break down some barriers, you have to be deep. You have to deprogram yourself, and that's a big ask to sort of say fundamentally, dismiss one of the most fundamental tenets of your worldview and start fresh. That's a big ask.
It is a big ask, man. It's hard. It's hard, and it's something that I've said before, and I've heard it from other people, so it's not original, but it's like Bitcoin isn't like an IQ test, it's an EQ test. It's an ability
So true.
you to be able to be humble enough to say, like, okay, what I thought about it might not be right, and maybe I should have a deeper look.
Yes.
And it's remarkable how few people actually go down that path, because it does challenge your worldview. But
Yes.
sort of to put a bow on your point there, is literally, in order for you to understand Bitcoin, you need to understand money. And to understand money, you actually have to revisit your assumptions about the way
Yeah.
money works and the way the world works. Because for many people, I'm just rereading Jeff Booth's book, The Price of Tomorrow, at the moment.
Great book.
And it just represents such a complete, it flips the model on its head to the way that normal people would think,
Yep.
because the idea in today's world is deflation is bad, because then we're earning less, and our debt becomes more and more expensive. So we need to inflate that away. And when you start challenging it from the ground up, it's quite fascinating. And then
Yeah.
you arrive at Bitcoin and you go, wow, this is the fastest horse in the race.
I get that a lot. Just quickly on that point,
Yes.
that friends of mine who I consider excellent investors, very smart, they will argue that you need inflation. Not too much, obviously, but you need a bit, because if you didn't, people wouldn't spend.
Mm.
And it's always just sort of been this trope that gets rolled out. It's like, okay, that's why we need it. Yeah, 2 to 3%. Okay, makes sense. And then you think, yeah, but you can't just make an assertion like that and not back it up.
Yeah.
And that's also one of the rabbit holes you sort of go down and go, actually, no, you don't have to have it that way. Actually, there's a better way of doing it. That is what Jeff does so brilliantly in the book.
Yeah.
Yeah. And it's another example of a fundamental 180 in a worldview that you've had. And it's not to be critical of anyone who's sort of struggling with this stuff. I think if I meet anyone and then on the first hearing of Bitcoin, they're all in, something is wrong with that person. Like you need like your spidey sense is off. If you're sort of like, yes, oh yeah, that's magic internet money, all in, right? No, if your natural reaction is always going to be, no, I don't know. You're trying to explain to a fish that it's surrounded by water. Right. And it's just like, well, it's always been there. Like when I was a kid, I'd get a dollar coin from my granddad, and just like from the earliest of age, money has been in my world. That's how I get my lollies and my toys. And when I'm older, my big boy toys, or whatever it happens to sort of, it's just sort of everything is around it. And then for someone to come out, some random libertarian YouTube dude to come and say, oh, the whole system's broken and it needs to go this way. Or it's like, it's a lot, right? And that will just generally sort of push people back. And I would sort of say with Bitcoin is that don't muddle it up with any particular ideology or philosophy. It's just a protocol, right? It's just a ledger. It's all it is, right? And we do all kinds of things with humans, but just get past that and then just ask yourself from a first principles perspective is, again, what is money? Why do we need it? Why is it valuable? Okay, what does a good money look like? Just no bias, no preconceptions that you're bringing into it. And you'll reach, well, I would say most people will reach a conclusion, and it'll be very hard, but you'll reach a conclusion that it's just like you can start to dismiss a lot of these long held sacred truths, which aren't true.
100%. And it's something that I'm actually very conscious of now, because with these ETFs, and we should definitely chat about those, with these ETFs, it's now thrust into mainstream consciousness once again. I think we last saw it in 2021. It's sort of retail interest sort of collapsed. Now I'm feeling my spidey senses are telling me it's picking up. And the question I've been sort of grappling with my mind is, how do we talk to this new cohort? Do we talk about libertarianism and freedom and privacy, even if I subscribe to those values? Or do we try and bring them through the sort of more normie friendly door? And then they themselves are able to go down that rabbit hole in due course, in their own time.
Great question.
And I would tend to say the latter. And so when I think about it, like, I want more people to get exposure to Bitcoin. I want more people to adopt it and to understand it. And I suppose the more that we can, without compromising who we are, engage meaningfully with these people, the better. And, you're not going to talk to 9 News or Sky News if you're just sitting there like going, how, you got to abolish the central bank, and, fiat is debt slavery. And you've got to have a bit more of a nuanced message. And if you just talk about it as it's money, it's digital gold. You can look at it's a commodity, and this is not my opinion. This is the opinion of the best, the biggest regulators in the world. It's a much easier, more palatable thing.
It's so much better. But
And then
don't what? Yeah.
the other thing you said, Andrew, which I think is really interesting as well, and this is something that's come up on the show repeatedly, is that like depending where you are, your financial system will work to a less or greater extent. If you come from South Africa, you start realizing, okay, the rand is garbage, but it's better than the sort of Argentinian peso or the Turkish lira. And if you're in Australia, you go, oh, this works. I can't see the problem. For the average person, it's more or less working. So it's always on a spectrum in terms of the financial system and its ability to meet the needs of its citizens. And I think, those edge cases, people will go, well, yeah, that's going to happen to the States. And well, maybe it does, right? But not right now.
Yeah, I'm very firm in this view. I think if you're a Bitcoiner, you're listening to this, and you, well, I shouldn't say if, because if you are a Bitcoiner, you're listening to this, then you will be talking to people about it, because that's, as we said before, that's just something that's uncontrollable.
Yeah.
Don't wrap it around your ideology. Even if you, we all believe in our own worldview, and I just think it's counterproductive. I thought another good book is The Progressive Case for Bitcoin. I often recommend that to some of my friends,
Okay.
a few lefty friends, and it's sort of like, I'm never gonna sell them on a libertarian ticket. Like I'm just not gonna do it. But I don't need to. It's not important. Money is money, right? It doesn't depend on how you think the state should be run. I mean, obviously, it's very closely integrated with all of that. But this is why I think Bitcoin has a right to sort of talk about the separation of money and state, as we had the separation of church and state.
Yeah.
So it is a natural thing to get tangled up in it, but it's just, no one likes, you're challenging someone's, as we said before, a core fundamental view in terms of money. And at the same time, you want to challenge a core fundamental political outlook. I mean, this degree of difficulty is insane on that. And it's unnecessary.
Yeah.
Bitcoin is apolitical. It doesn't matter. I mean, do you have a need to save money? Yes, I do. Do you like to save money in a currency that's unlikely to debase? Programmatically can't debase. Yeah, I guess so. Do you like a money that you can transact anywhere in the world, that's got, in fact, one of the top traded currencies in the world as we speak today?
Yeah.
Right? Like the Bitcoin is accepted in more countries than the Australian dollar, right? Like, do you want all of those things? If the answer is yes, then fill your boots. You can vote for the Greens. You can vote for the 3-day weekend part. I don't really give a stuff. But you still might make something that I want to buy, and you might want to sell something that some service that I'm providing, and we can get along just fine.
Yeah.
When you push people too far on those things, it just puts up walls. So I always cringe, because I listen to so many Bitcoin podcasts, and it comes up again and again. And by the way, I've got a lot of sympathy. I like to sort of choose from the buffet of different political persuasion. I think there's some good takes from a lot of the different schools of thought. So I'm pretty I roam far and wide on all of that kind of stuff, but I just find it a distraction to the bigger thing that's at play here. So
yeah, no,
don't get too crazy on people. They're just going to push back, and that's against the mission.
Yeah. No, I think you've got to tailor your message to the audience. If somebody is more freedom orientated, you can touch on the libertarian side. If they're more left leaning, then you can talk more about sort of what Bitcoin can do for impoverished communities and folks living in Africa,
and the environment,
and the environment, all this kind of stuff. If you like, if you're part of the Greens,
go to where they are. Go to where the
meet people at their place in the world, and because Bitcoin is apolitical. It's money for enemies, it's good countries, bad countries, good people, bad people adopt it. It's just the way the
people are going to use it in really ugly ways.
Yeah.
Like all kinds of horrible things that happen in the world, where arms trades or, human trafficking. It is. But it's like, well, guess what? That happens today with regular fiat currency. Like that. It's not because of Bitcoin. It's not like malware attacks and the rest of it are all because of Bitcoin. It's just not, and you've got to sort of separate these Venn diagrams overlap at a peripheral level when you look at them. And And I've come across a lot of people who I think if it wasn't for that one misconception they had on Bitcoin, they'd be all in. But they think, no, it helps, sex trafficking. So I'm out. Just on moral grounds. Yeah, but well, and it's just so stay away from all of that kind of stuff. And as I say, like this is just, do you like increasing your purchasing power? Do you like having complete control to interact like on a global monetary network that no one can stop you using? That's everyone is going to appeal to those kinds of use cases. So stay on message.
Totally. And I think it's inevitable, to be honest with you. With any new movement, it starts at the fringe, and as it becomes more mainstream, that sort of culture starts fragmenting somewhat. And I guess some of the diehards would start saying, "Oh, it's changed for the worse." And maybe the same. I was chatting to Piers recently, Piers Cochran, and he's like, "Yeah, the same was said about the internet. They had a dream about like everyone running their own email and servers and all that jazz." Like. And eventually it's like, oh, now it's just a technocratic surveillance state and they work with governments. And it's like, well, we exchanged, our freedom for convenience because we wanted to just
we'll do it again. Most Bitcoin will be held in custody is my.
And that's just kind of way. So maybe that's a nice segue to the ETFs, because obviously it's the story of the year so far in the world of Bitcoin. Obviously we've got the halving coming up in April, and that's going to be a tailwind, as it has historically proven to be, or if the past is the future, if you like. But yeah, give us your thoughts just on that, the volumes of the ETFs and what that means here, at least locally in Australia, because I know we've got something potentially coming on the horizon with monochrome.
We've got them. We've got them. Yeah. We've got them now. I mean, they're not on the ASX. They're on the other.
The CBOE, or what do they call it?
Yes, the CBOE. Yes. Yeah, you got. Yeah, you can right now. If you've got a trade ComSec app, open up, you can buy an ETF. But Canada had one as well. There's listed in a few other parts of the world. These are spot Bitcoin ETFs.
Yeah.
It's not Wall Street. Wall Street is different. Wall Street is the largest, deepest, liquid, most active capital market in the world. It's very different. We love to think we punch above our weight here in Australia. It's sort of David and Goliath. And so the thing that fascinates me with the ETFs is that was discussed and debated and talked about ad infinitum in the lead up. Will it happen? I mean, was the Winklevoss twins who first made a push for it? Gosh, 2015 was it?
Yeah, I think it was 2014, if I remember reading that correctly. Yeah.
So this thing has been in the arena, and Bitcoiners have been saying it's going to be a big deal if and when it happens. And what I think is surprising is that it was a bigger deal. Like you have these laser-eyed hyperballs saying it's going to be massive. It's like you were wrong, but not directionally. You were just wrong in like, I remember even when it was a lock, we knew that it was going to happen, and people were sort of talking about flows estimates for the year, and that it isn't blown through. So for those, I've got to remember that I'm talking to a Bitcoin audience here, so everyone knows this, but easily the most successful ETF in history, one of the most, already doing the most volumes. We haven't even had a lot of the financial networks plug into this kind of stuff yet. They usually take 3 or 4 months before these advisory groups and stuff, people who have sample portfolio allocations and just the menu that they provide to their advisory network as to what you can and can't do. All of that hasn't even happened yet. And we're already seeing these kinds of flows. So the ETF is a big deal. It's a big deal. And I think was it Lynn Alden or someone I heard mention it's like an API for Bitcoin.
Yes, Lynn Alden. What a champion.
Brilliant, right? Like and Fred Krueger talks a lot about this too, which is, again, my mum and dad are not listening to your podcast. No offense, Dale. Yeah, and they're not listening to any Bitcoin podcast. And I have talked to them about, my hardware wallet and my seed phrase, and this is what I'm never getting that over. Right? But if I say, hey, Dad, open up your phone, open up ComSec and press buy, punch in this code and hit buy. It's so super easy, right? And all of the things that we've seen up to this point have been a preamble. I honestly think you have no idea of the size, or people have no idea of the size of capital that is out there, and that will, I think, steadily make its way into Bitcoin. And here's what fascinates me about all of it is that Bitcoin as the protocol has run flawlessly pretty much, right, since its inception. And that hasn't changed. but it was pretty useless in the early days. I mean, even in 2017, I couldn't do much with it, right? And this is because of Metcalfe's law. Like any network, if you and I are the only people in the world that have a Zoom account, we can call each other up. That's it. That's the use case. Dale can talk to Andrew, but that is a power law. So the more people using the network, the more valuable it gets. So what's different here is that people laugh at my traditional finance friends laugh at me when I say this, but when I talk about the fundamentals of Bitcoin, because yes, there are fundamentals, right?
Believe it or not.
There are, like, believe it or not. And so, you've got things like, what have we got? We've got the hash rate that's only been going in one direction. We've got the number of wallets that are active going only in one direction. We've got the number of Fortune 500 companies with its on its balance sheet only in one direction. We've got the number of apps and APIs and layer twos and all the development that's happening on the fringe, incorporating it, like Nostr, right? Like all of these things, that's only going in sort of one direction. It's all happening against this sort of macro backdrop. We've got nation states sort of adopting it. And so now, even though the protocol is still producing a block every 10 minutes, the very fact that there are more people on it makes it more valuable to me. Now, this is still with 1% global adoption. When it gets to the point, people always, I think this is the other problem that people have is, I can't buy a cup of coffee with it, thinking that the attributes of a money, medium of exchange, unit of account, store of value, all have to happen simultaneously and instantly. And it doesn't progress that way. It starts, things start as sort of collectibles. And they sort of start as a store of value, then they go to store of value, and then they become a bit of a medium of exchange, and then finally the sort of the unit of account. And we're miles away from those later stages. But the point is that the more nodes on the network, and I mean the participants in the network, the more useful it becomes, because now I can say at the pub or at dinner, it's like, well, let me shoot you some Bitcoin to pay for this. And this is what will also break, I think, people in the traditional finance space's brain, is that we're so used to price and value being an inverse relationship. So the higher the price, if pick a random share, BHP.
Yeah.
I don't know, whatever it's worth. Let's say that the market's right and it's currently its fair value. Now, if you double that for whatever reason, the market gets very enthusiastic. Definitionally, the future value is lower because the price is higher. It's like bonds and yields, right? It's an inverse relationship there.
Yeah.
The same company at half the price has got a far better return potential than one that's at double the price. Bitcoin is different. Bitcoin is more valuable the higher the price. So when it's $1 a coin, it's useful for buying some drugs on the Silk Road. Right? I can do that. 100,000 USD, I can now settle international import-export transactions. The use case is far broader, and it still allows you to buy your drugs on Silk Road as well, right?
Yeah.
It doesn't go out of one pond into the next. It sort of it broadens, and it gets bigger and bigger and bigger and bigger. And so you get this thing. If there is one thing that I learned the hard way growing up in this industry with the tech boom, and starting in the tech boom, seeing that come and then go and then rebuild itself, and who the winners were. If there is one thing that I would tattoo across your forehead, which is network effects. Network effects, network effects, network effects. Look for network effects. Find the dominant entity that has the best network effect and go all in, because they are super hard to kill. Like, they are very, very, very hard to kill.
Yeah.
So you've got something that's only getting more valuable because there's more and more people on it, the Metcalfe's law thing. It's more and more valuable because it's got a higher market cap, more volume, more liquidity. It's more useful. I can trade at higher values. I can do all of that stuff with it. What was my final point? And it has this network effect that only gets stronger and stronger. And it is at a point where it's sort of like, are you not entertained? What do I need? What do I need to show you? And this is my challenge. I am just verbal diarrhea here. Sorry, Dale.
No, don't worry.
I'm shooting from the hip. I don't even.
Don't worry. That's the purpose of a podcast. You let your guests run, and sometimes they veer off track, but they sometimes deliver gems.
I hope you've got some good.
I've given you lots of
editing skills.
Yeah.
That's good.
I suppose, Andrew, but the point you're making there is just also like, when people are looking at Bitcoin, it's best to view it, if you're a traditional investor, not, is there anything, let's put it this way. Network effects is what has driven the valuations of all of the tech companies that today are these conglomerates. And it's something that has not infiltrated the average value investor's brain. It's not something that they tend to stay away from those types of things for that reason. But to go back to the sort of the ETF stuff, what you were saying earlier is spot on in the sense that the vast majority of capital have not even begun to think about investing, in the sense that there are tens of trillions of dollars with the independent financial advisors who have their own internal processes and the way that, in terms of the way they add various products to their suite of products that they offer to their clients. And so they've got to do their own due diligence and all these different types of things. So it's not as if like the product's available and suddenly it's like, hey, everyone, let's jump in. So
I just remembered my point. Sorry.
Yeah, go.
For those listening, we were recording this early in the morning. I've just stumbled out of bed here. The coffee hasn't hit. That's my excuse, and I'm sticking with it.
Don't you worry.
The other point that I think is in context of the ETFs and just Bitcoin at large is that we are social proof is such an important thing for us. When the only person who has Bitcoin is your weird libertarian mate at the pub who uses it to do whatever on the internet, it's sort of like, that is not a halo that a lot of people want to be associated with. When Larry Fink is doing it, when it's being recommended, when people on CNBC, very serious people who are speaking about it in a favorable way, it shows we're hairless apes, right? Like we're all just monkeys. Yeah. And when you monkey see, monkey do. I don't pay attention when it's this fringe thing. That's all, there's this Twitter bubble that we all live in and we think everyone sort of sees that kind of stuff. But for all the normies, it's not out there. But when, again, you see Larry Fink on there saying, no, this is a protection against debasement and it's a great store of value. And by the way, it's a good way to sort of diversify in its new asset class. It's going to actually enable you to improve the Sharpe ratio. You'll get better returns, lower volatility. It's just, okay, that's serious. And now my investment advice is doing it. And so all of a sudden, when I'm at a barbecue, we're not there yet. But we're getting there. When I say, yeah, I think Bitcoin, I've got 3% allocation to Bitcoin. And people look at you and go, yeah, that sounds smart. I've heard a lot about that. Like it's just, it doesn't even matter whether the underlying narrative is correct or not. Just the fact that I'm seeing more and more of my social group do it, that is going to propel things immensely. When, as I said, we're not at that stage.
No.
You will get to the point where the most hardcore hater is just sort of like, I am in the majority now. I hate it. I think it's ridiculous. It's a Ponzi. It's a bubble. It's a tulip. It's all of these kinds of things. And I can say that, and I can say that loud publicly, and everyone's going to be on my side. And there's going to come to a point where you're Peter Schiff, and it's just like, dude, shut up. Like, do yourself a favor. You're in a hole. Stop digging at this point. And in fact, that's my challenge to those that I'm not critical of those that haven't made it yet. Everyone will make it on their own time, and I guess they'll get the price that they deserve.
Yeah.
But what I really stress to people is, I'm not trying to talk my book here, but you need to at least have a set of thresholds that you would need to see passed before you would buy. If you say to me right now, well, if I ask you, okay, Bitcoin's not for you now, you don't see it yet, you still see it as speculative, and maybe that's legitimate. I don't want to criticize that. That's fine. That is fine. But if you say to me, no, not now, not ever, no matter what, you're an idiot, frankly. I mean, like that is the dumbest thing that you can say. What you can say though, is you can say, well, look, it's not for me now. I have these concerns. I haven't gone on the journey yet. And even if I have, I'm still a little bit concerned about Exhibit A or Exhibit B. Write down what would need to change for you to change your mind. I do this with equities all the time as well. It's not for me now, but I might be interested if the price was 30% low. It's not for me now, but it might be for me once the company hits cash flow positivity. It's not for me now, but once they get past this capital raise and the balance sheet is strengthened, then I will look at it. And that's very powerful kind of stuff, because if you just say, no, now, flick, gone, never to look at again, that is a mistake. So maybe it's sort of like, what do you have to lay out there, and at what point do you have to cross? Well, that's a personal question. So is it when we see another nation state adopted? It's not just El Salvador. Okay. What if a G20 central bank puts it on its balance sheet? Will that get you over the line? No, still not enough. Okay, fair enough. Now it's in the Apple Store and the Google Play Store. Like all transactions are options with that. Elon Musk puts it into Twitter. You can now zap on Twitter. These microtransactions. There is a point, and I can just keep giving you examples to, it is the global reserve currency. Everyone transacts in it, and it's the only unit of it. Like if you want to buy something, you need Bitcoin. Like I'm not saying we get there, but but that's the logical extension of all of those things. And if you're still the person who at that point is going, no, I mean, you need to go into an asylum. That's just, it's pure craziness. So what I'm
Yeah,
saying is
lazy,
just to
lazy.
tie it up a little bit. Sorry
Yeah.
for all the blathering, but it's sort of like, if it's not for you, it's not for you. That's fine. But make sure the things that the objections that you have, make sure you've got a good basis for that, right? Like challenge some of those concerns that you have. You may be surprised when you really, and again, don't trust, verify, don't listen to me. You may be surprised how easily you overcome some of those concerns. And if you can't overcome those concerns, that's cool too, because we all get there on our own time, but at least have some milestones mapped out as to what would prompt you to come back and revisit the thesis and potentially reformulate the thesis. Is it a mistake not buying Bitcoin? Was that $1? Yeah, clearly it was, right? Like we can say that. Was it a mistake not buying Bitcoin at the current price? What is it, 100,000 US dollars? Well, potentially in 5 years' time, you might think that. But the best time to plant an oak tree was 50 years ago. The second best time is today, right? And you just need to make sure that you're not a nope, never, ever kind of person, because, and I don't even care if we can talk about any kind of investment. Like that is just dumb.
No, you're shooting yourself in the foot, and
Yeah.
you're letting your ideology get in the way, or you're just being intellectually lazy or stubborn for whatever reason. If you resist whatever asset class, like when the facts change, you've got to be able to change your
I
view. And if you're
love
not
that
going to do
saying.
that,
Yes.
then I'm sorry, I can't help you. Then have fun
Yep.
staying put. Now, given the fact that I mean, in terms of the day-to-day work that you do, you're having a look at, I think, as I understand, your edge is small cap shares on the ASX, and perhaps the small cap shares relative to the big ones, there is more potential upside. But obviously, there's a lot of execution risk. There's all sorts of different factors that play into an analysis of whether a company is likely to succeed or not.
Yep.
And then you weigh up the potential returns of that against something like Bitcoin, and knowing that sort of that folks like Bill Miller have said something along the lines of like, make concentrated bets and then watch them closely. It was something like,
Yes.
only have a couple eggs in your basket and then watch that basket super closely. That's
Yes.
sort of the approach that Bitcoiners take. But I guess I'd love to know, kind of like, as somebody who does this on a day-to-day basis, and then knowing what you know about Bitcoin, which is clearly enough to demonstrate that you've made an allocation, all that jazz. Let's put real estate aside because you can live in it, and we're not talking investment property today. Why
Unless
would
you
you
want to add
allocate?
an extra hour to the podcast, then
Yeah,
let's
no,
not.
but I suppose the question people would want me to ask is like, why? What sort of allocation would you recommend, or what sort of allocation have you made in light of your, the kind of day-to-day work you do?
There's no right answer. Every answer, it's a personal one. Your allocation should depend pretty much exclusively on the degree of your conviction, and the degree of your conviction will depend on the amount of work that you have done. So if you're new to this and it's sort of like, oh, I'm curious, I've heard a few people talk about it, I'm intrigued, it makes sense. I wouldn't put more than 1% in at that stage, right? Because it's easy to hold Bitcoin when it's rallying. It's really hard when it drops 70%, right? Which will happen. I'm sure that'll happen again at some stage, right?
Your 1% goes to 0.4%. You're like, what the hell am I doing here?
And so it's sort of, everyone's got conviction on the way up. Your conviction is tested on the way down. And again, let's imagine you're an early investor in Amazon, or let's go with Pro Medicus here in Australia. It's like an incredible wealth creation vehicle. It's just gone from like 80 cents to above $100 in the last 6 years or something. But the drawdowns on that thing were insane, right? So if you bought that because, oh, it's going up and I heard someone say something cool about it on Twitter, the moment it drops 10%, you're out.
Yeah.
So if I say, what's the proper allocation for Bitcoin? I go, I think you should have 30% of your money in it. It's like, well, that's might be appropriate for someone who really fundamentally understands it at their core and has a very, very, very high conviction. But for someone who's new to it, that is the worst advice I could give, because they will panic and all you will do is lock in potentially big losses. So I know people who are 100%, right? I'm sure you do too. And I don't want to, I don't want to dox myself, but it's a major allocation. It's more of a major allocation after the last few months.
Yeah.
Just because sometimes the market reweights things for you. But I'm not doing any victory laps with that. I didn't I didn't buy this thing expecting a near-term pump, and it doesn't. The thesis hasn't changed at all. I'm in this for the long term, and as long as the risk-reward proposition looks good, as long as all of those fundamentals and more that I didn't mention that are moving in the right direction, why would I sell? Why would I get off this train? Because the chances are I get off this. Why, put another way, why would I get rid of my crappy money, buy the apex predator of money, just to turn it back into a little bit more of the crappy money? You know, like I think you can spend your Bitcoin. Like money is for spending. Like money, it allows you to do some course. You enjoy your life by all means, but to sell just for the purposes of converting it back to fiat, or then I can reallocate to bonds or something, I think is missing the kind of point. And when you make that, as I know you have, Dale, and many others, you make that transition, it's sort of like, it's not something to invest in. It's just something to save in. It's a subtle but vital difference here. It is a savings technology. I put my work energy into that, and it's going to be volatile. It's going to be crazy. But as long as the main things move in the right direction, it's probably going to increase in purchasing power over time. And as and when I need for that, I will spend the money when is appropriate to me.
Yeah.
And for those kinds of people, particularly those if you've got a pretty reliable source of income, it's like all in.
Yeah.
Right.
Yeah.
Or I have to read 1,000 company reports, every quarter and rebalance my portfolio. And it's like, I just want a savings technology that's really easy. I don't have to think about. Yeah, okay, it's volatile, but if I can get past that, then it becomes harder and harder and harder to sort of contrast that against other means to achieve the same aim.
100%. And that's exactly the way I kind of look at it, because you think about how many different companies are in the world that you can invest in, like tens and tens of thousands, right? I mean, in this, I'm not just talking about in the US, but whether it's Australia or in developing markets. And then you think about, okay, now I need to have an edge in that sector. I need to have insights into sort of the management and their competitive advantage and their pricing strategies, and I need to know all these different things. Or what I've done is I've just spent thousands of hours on Bitcoin, become a hyper specialist in that area, and that allows me to have conviction and therefore a concentrated bet relative to someone who is just nihilistic, hopeful, delusional. And if you're not skeptical from the outset, I think you need your head read.
You do.
As we sort of approach the end.
Can I just want to interject on a point there?
Go for it. Yeah.
Can I say, as someone who's done it for a living for decades, is like, it is hard to beat the market, right? Like, if you ask everyone, are you a good driver? Yeah, I mean, everyone's a good driver, but we know that they're not. And males we're the worst, right? When it comes to share marketing, it's like, I intellectually know that statistically it's very hard to do, but I'm special. I can beat the market. And let me tell you that if you can, you are the exception to the rule. I'm proud. Look, I'll put my hand. I'm proud. Like, since I'll just talk about the publicly disclosed stuff because it's on Strawman. That scorecard there's up nearly 14% per annum over since 2017. It's not had a great run recently, but overall the average has been really nice. But let me tell you how much work I put into that. Like, that was insane amounts of work and lots of like dog shit that bought along the way. Like, it's so hard. So if I can have, this is my biggest issue with the corruption of money, is that the average person should focus on what they do for a job, for what value am I creating for my fellow man in society? And once I've done that, isn't it good enough just to save? If I can't save in the money, then the money is that is the first sign that the money is broken. But you can't. That's why we're here in Australia, we're all like mad for property, and we love our shares and stuff as well. It's just like all these people who are coming and joining Strawman or joining up to any of these other sort of services. There's a decent percentage there that are just like passionate investing nerds like me, but for most people, they're forced to do it, right? Because like, well, I have to, because money in the bank is just going backwards here, and like. So not only is it the return potential, but it's the ease potential that I want to underscore of that as well. It's just like, I just do my job, and when I spend less than what I earn, I save the rest of it in Bitcoin. I'm only putting money there that I can leave untouched for 3, 4, 5 years, ideally, and longer. Job done, and get on with life, right? I don't want to spend my night reading annual reports.
No,
most people don't want to. I'm a different. I still love that kind of stuff, but most people
you're a niche operator. But that is 100% true. And the thing is, nor should we have to. I think what fiat currencies have necessarily required us to do is either to invest ourselves or to outsource that to professionals.
Yes. Who are going to, and I say this as someone from the industry, statistically speaking, I can say this as fact. There is above a 70% chance that the so-called professional is going to underperform the market when you factor in their fees. That is, people have done the work. We've got the numbers, right? Very,
100%.
very few professionals deliver significant, serious, lasting alpha to their clients. There's so many snouts in the trough in that industry. It is ridiculous. And so, yeah, your investing is making money, but a lot of the time it's making money for this person who's doing nothing other than like putting you into a sample portfolio. It's like, it's madness.
No, and especially with the rise of ETFs and that sort of thing, I think I've got some family members who my dad's kind of had a look at their financial plans and all that jazz, kind of, because he's a CFA, and just their financial advisors were just going like, say, all right, yeah, we're going to put you in this, 5 or 6 different ETFs, and you're like, what kind of value you're adding? Like, there's none, and you're charging like 1%. Like, I need something.
It's not as even if the advice is that bad, right? It's just like, again, putting Bitcoin aside, it's like, yeah, a diversified mix of passive low cost index funds. That's a very sensible savings, but do that. Why not?
What are you doing?
What are you doing here?
Yeah. No, it's totally true. Andrew, this has been great, man, and I really look forward to chatting more at Bitcoin Alive, which
getting close.
Next week now. Yeah, we're getting close. It's that wonderful time of the year where we get together with fellow psychopaths, and basically, yeah, it's just it's going to be glorious, especially now given the fact that
I was going to say, yeah, different vibe. Last year
are so good.
Depths of the bear market.
So with that said, I wonder if I can tempt you into providing us with a sort of price prediction on for a top in this particular cycle.
Oh, this is
a range is fine. I mean, look, we can all be, but yeah, I've got my thoughts. I'd love to hear kind of where you see this landing in the next, let's say, this particular cycle.
Can I just preface it by saying I'm of the view that price predictions are worthless, and only because I've been in the game.
I'm going to cut that out. Okay.
I'll give you one because it's fun. It's fun to do, but
yes,
I've been in this game, not in the Bitcoin game, but I've been in the investing game long enough to know that people hear what they want to hear. And you say something for a bit of fun on a podcast, and then, in 3 years you get all this hate mail. It's like, you said this, and I'm like, no, look, all care, no responsibility, right? Everyone's gonna. So my North Star here is, again, does this exist in 10 years time? I'm like, well, yeah, as long as one person in the world running a node, it's going to exist. So yep, tick. Is it going to be more valuable than today? Yes. And is that going to be significantly more than today? Then yes. So that's super vague, but that's kind of my North Star. I think we're on a path. The game theory aspect to this thing really kind of drives it to levels that's $1 million and above. It probably caps out somewhere around $10 million if everything goes the way that a lot of people want it to. But that might play out over decades. So I'm in for that, right? Like I'm a super patient investor. But this cycle, I can easily get to 200K US.
Yeah.
But it'll get there. Well, so here's a couple of scenarios. It could be at 50,000 next week. Let me put that out there as well.
Of course, yeah.
But I think even if it does something of that magnitude, it's not going to go up in a straight line. Nothing does. I got to tell you one thing. I'm having a bit of an issue with some of the narrative that the Bitcoin is putting out at the moment. They're saying things like, you hear there's only less than 2 million of coins on exchange. There's only 900 coins a day being mined. The ETFs are hovering up thousands. They're going to run out of supply, and then we go parabolic. And I kind of think what they miss there is the reflexivity of markets in general, in the sense that they will always find supply. But there will always be supply of Bitcoin. Because rightly or wrongly, there'll be a point at which someone goes, yes, I will take that deal. Now I could say to you, Dale, hey man, give me a Bitcoin. I'll give you 100K for it. Off. Get more on the market. Okay, 110K. No, I'm a long-term holder. 150K. No. I'm in this for the mission. This is. I came for the money. I'm here for the revolution. Okay, Mr. Principles. $10 million a coin. Like, you will. I don't care. You give me Michael Saylor, right? There is a point at which, personally, he's probably going to take a little bit off the table there, and maybe Saylor's not a great example there. But my point being is that we will find supply. And there's a whole bunch of people out there, again, rightly or wrongly, with a certain figure in their head that have been hodling for years, all kinds of psychological and emotional pain. And they'll just think, I really hate renting. I want to buy that house. Or I've always wanted a nice car, or I've always wanted to go visit Japan, or you know what I mean? It's not, again, they're Bitcoiners, so they're not cashing in because I'm out of this now. I've made my money. They're going to want to spend it. And that's legitimate. We've got to be careful not to sort of make that a negative thing. You're allowed to sort of spend your money, but I suspect we'll pass these sort of psychological thresholds, 75 first, then 100,000 US, then it's probably something like 150,000. And at each of those sort of marks, I wouldn't be surprised to sort of see some big pullbacks along the way. So yeah, look, again, all for fun. It's all for fun. Totally fun. But 200K is I reckon by the end of 2024 is possible, certainly by 2025. But expect lots of 20 to 30% drawdowns. And let me say this too, just to completely cover my ass before we close off the show, is that if it didn't, let's say that we don't, this is it, like this is as good as it gets, or let's say it drops back to 70,000 Aussie dollars. I say this through gritted teeth because I know it to be intellectually true, but emotionally very difficult. The me from 10 years in the future will be glad of that. Because if all the other fundamentals that we mentioned are still moving in the right direction, adoption is growing, et cetera, et cetera, et cetera, I just get an opportunity to buy some really cheap sats. Yeah. So what you want this in equity markets too. You want to crash in your shares, but you want it to be associated with something that's outside of the company. So remember a few years ago, this Icelandic volcano went off. Yes. And it disrupted all the air traffic. Yes. And so it played havoc with the share travel stocks and all this kind of stuff. Now that to me was like, they don't come along that often. It's like, this is perfect. The CEO hasn't come out and said, oh, the accountant ran away to Bermuda with all the company money. Now this is like, oh, act of God, this is happening. It's going to suck. We're going to lose money this year. But you think, yeah, but that's not going to happen all the time. That is a one-off kind of thing. So I want something like that with Bitcoin, something that is perceived very negatively, but actually doesn't break the thesis. Nothing's changed. All that's changed 100%. Is some numpty on Channel 9 has said something and then people are freaked out and it's gone down. It's like, great. Now, if we wake up and we find out that there's a bug unknown in the protocol or something like that, different story. I don't think it's not going to happen. But what I'm saying is this price, so I'm being way too verbose. Price will be volatile. I think it'll be very volatile to the upside. When it goes down, when the price is volatile to the downside, you just want the driving forces to be something really asinine, like profit taking, like Jerome Powell said something, or JP Morgan shot from the hip on CNBC and said something stupid about pet rocks. Those combinations of falling prices with a very weak narrative are beautiful. And hopefully we'll get, I say it through gritted teeth, but hopefully we get some.
Gritted teeth, indeed, because I'm largely all out of fiat for the most part. So,
I can't buy the dip. There's what? There's what?
So, bugger your dip. Like I'm
but be prepared for it, Dale, and to your listeners as well. And I know you are, but it bears repeating. I think I've learned this in equity markets is that when markets are down, I'm very busy preaching the benefits of share market investing. When the bulls are running hot, I'm like, well, this is great, enjoy it. But I like to point out the downside because you want to be mentally prepared for it. Because again, if you're not mentally prepared for it, you might react in a knee-jerk reaction and you will almost certainly drastically regret that knee-jerk reaction 5 years hence.
Yeah, totally. No, and I think I think your prediction is not too different to mine. In fact, I was talking about a sort of 130 to 150 top, but since the ETFs, I've just sort of realized I think that might be a little bearish. So I've upped mine to about 200K. I'd say probably mid next year or something like that. But anything is possible. All the models are broken.
Yes.
None of them ever work. You can use every single model under the sun, but there's always a reason ex post facto as to why the model didn't work the previous time, but this time it's working. So it's like, you know what? Nobody knows. There's too many variables.
Yes.
People are going to be taking profits whether you like it or not. There's not going to be, at this stage, I see any sort of ridiculous like God candle of $1 million overnight. Like I just can't see that thing.
So much volume would flood the market on an event like before it got to that level. right?
Yeah,
Not
because
going to
I mean,
happen.
honestly, I would 100% be willing to take some chips off the table
Sure.
if I got to any of those life-changing figures. I mean, and I'm a sort of diehard hodler, so it's
Yeah.
hard for us to even contemplate what the price would do once it's crossed those thresholds, 100K. And if you're not expecting these pullbacks, then I'm afraid you haven't done your work, because
You
this is the
haven't.
whole point of this is how Bitcoin works. It's got incredible volatility to the upside and downside.
Yeah.
So
Yeah.
it's
It's why the stay humble, stacks. Start that again. It's why
yeah.
this stay humble and stack sats Odell phrase is so perfect. It is so perfect, right? And you really got to own that to your core. I do think I want to know what you think here. This cycle feels a little bit different in the sense that this constant bid from the ETFs, like we have gone from, what is it, 40,000 Australian to 110,000 or something as we
Yeah.
speak now. And here I am just saying, like when it'll volatile to the upside, but lots of sort of downside, a lot of sort of like dips along the way,
Yeah.
pullbacks or drawdowns, whatever phrase you want to use. We really haven't had it. We just haven't had it. Even this morning when I woke up, I was like, whoa, there's a bit of a pullback. And like, just as we've been talking, it's like, oh, okay, filled. So I would caution people, history rhymes, but it doesn't repeat. And I suspect we will be surprised if we map previous cycles onto this one and go, well, this is what happens. I mean, it's already broken. Again, we haven't had the drawdowns, right? We've got the all-time high before the halving. That's never happened. We've got the relentless bid from the ETFs, which have only just really started. Again, the advisor networks, the pension funds, they're not here yet, right?
Mm.
There is a distinct possibility. And again, I don't know if this is my base case, but there is a distinct possibility that we just up and then sideways, up and then sideways, up and then sideways. And then maybe we don't have the 80% drawdowns that we saw in 2021 and 2018. And that, like, maybe it's crossed a threshold now where, what Samson Mao call it? The Veblen threshold,
Yeah.
where it's sort of like, actually, now that the big money is here, that is less likely, at least until people's allocations are filled. So the narrative now being sort of amongst traditional finance being, up to a 5% allocation. So when that capital reallocates to that point, okay, maybe the wind comes out of the sails from that perspective a little bit there, and then maybe more
It's hard
sentimental
to
market forces have an impact, but that's still years away. It's years away.
I mean, I think I might agree with you in that regard, in the sense that there is this chance that we just do a sort of slow and steady walk. There's no sort of parabolic stuff. It's just that every Monday the orders over the weekend get fulfilled and Bitcoin's up 2 or 3%. And when we're talking kind of big numbers now, the 2 or 3% would result in it moving up $2, $3, $4,000, whatever it might be, and that will just grow over time. And then we might have a sideways period, but maybe there was so much pent-up demand during the last cycle that essentially was unable to invest, that now there is this door that can open up. And maybe the all the investment advisors and that network will trickle in. Maybe they'll pour in. There's so many different ways of thinking about it, and anyone who says they kind of see how this one will go is just deluding themselves. I think if you mentally prepare for hellish drawdowns, which I don't necessarily see happening, but
it could.
it could
As you
happen.
said, anything's possible. Anything is
And
possible.
I'm mentally, like, this is now my first 4-year cycle. I've just done it, and now this is the sort of second bull market, if you like. And that you learn a lot about yourself and your
Yes.
position during a bear market. And so
Yep.
I feel like I'm a weathered veteran in some ways, even though I'm
Yes.
22, and I'm prepared for that. But do I think this time could be different, which is the old famous,
This time it's different. Yep.
yeah, but it might well be. But yeah, sort of prepare. Yeah, hope for the best, prepare for the worst. Let's say that.
That is so well said, and I love that phrase. I guess I know you've got to wrap it up, but I'll just say this: a couple of points I want to make, and again, it's probably not needed for this audience, but some of the concerns I get from people who I've sort of tried to orange pill, and they're sort of like they're almost there. There's a couple of things. The first one is I'm too late. It's like, well, whoop-de-doo, I get it, but it's not $100 anymore. I would say, although obviously the lower the price, the better, the risk reward proposition has never been better. in the sense that, yes, it's a lot more expensive now. The fiat value is higher, but the risk has never been lower. The reality was when the dude bought the pizza for 10,000 Bitcoin, like you look at it and go, oh, what an idiot. It's like, no, it wasn't. No one had used it before then. And there were thousands of the things around. You could get a whole bunch of it. Like, of course it wasn't worth that much. Just to think that anyone back then could have known how history was going to unfold, even the most bullish of assumptions. I don't think you could have seriously made that sort of argument. In the year 2024, as I said, nation state adoption, Fortune 500 companies, FASB rules sort of tightened up, ETF on the right, all the apps and stuff that we have now available, all the educational content and resource. Like when you want to find out about Bitcoin, you Google, you're going to find so much stuff. Even 5 years ago, you really had to rummage around. So it's sort of like, it is not too late. This is not a share where the value proposition goes down with the price increasing. It is not too late. Yeah, it is too late if you wanted to like 1,000 exit in 5 years. Maybe those days are kind of gone. But from a risk reward proposition, it's never been better. And the other thing you often have to remind people of if they're new to this space is they'll go, 100,000, I can't afford a Bitcoin. Oh, Doggy Coin 3 over here is only 1 cent. I'll get that instead. Don't anchor, don't suffer from unit bias. Obviously, you can buy $1 worth of Bitcoin if you can. So just don't make people feel dumb when you point that out, but we are so deep in this thing that it's sort of like laughable to even point it out, but you'd be surprised the number of people I come across who say, well, I can't afford one. It's like, well, no, you can buy $1 worth. Oh, can you? Yeah. Oh, but it's already gone up so much. It's like, yeah, but the risk has never been lower. Right? And even if we're not going to get those historical kind of gains, which I still think are possible to some extent, it's still got a decent chance of outperforming every other asset class. At least to date, it has over every period. So,
those are some good points there, Andrew. I mean, you know what? And frankly, like, I had this conversation with a fella at my house. He's come around to do some work and he's talking about Bitcoin. And then he's like, oh, no, he's also played in the share market. He had some random mining share, and that was,
of course it was a random.
And he goes like, oh yeah, we looked at it and it was 26 cents, and I was like, oh yeah, that's cheap. And then I turned my 5 grand and 75 grand, and it's down to 0 now. And I'm like, I didn't want to say to him like, listen, bro, price is what you pay, value is what you get. Like, Bitcoin could be like 10 million and it's still more valuable than a 7 cents company share, so there's this fundamental analysis. But maybe in closing, let's say this: for Bitcoiners, we get that unit bias is something we've had to deal with from the outset. I think that this episode in particular could be quite a useful tool for you to send to people if you want to orange pull them, because
that's just what my friends want, is for me to say, hey, here's a podcast that I was if you're not sick of me talking about it already.
Exactly. And it takes a third party to sometimes help break through, because our egos get involved when our friends start saying, you must do this, and then I instinctively go, no, don't tell me what to do. Andrew, this has been great. And as a sort of former stock market investor, no longer, I really enjoy your takes, and I'm looking forward to catching up at Bitcoin Alive. I think it's going to be an epic conference. Do you want to give that audience a handoff to where they can find you on the internet?
Well, look, if again, this is the wrong crowd, but I run strawman.com. If you're interested in ASX small cap investing, which is just endlessly fascinating. Like I think the people who really get it, it's because of the chase, it's the hunt, is that kind of thing. But other than that, I'm on Twitter, sage_Simeon. I don't tweet a hell of a lot, but they're there, and hopefully see everyone in Sydney at the Roundhouse, because it was fun last year, even despite what was happening in the price. This year it's going to be, I imagine it's going to be like times bigger, right? And just the atmosphere is going to be great. And
no, we can talk about how we're all about here for the revolution and all that jazz, and it's true, but it helps when the revolution is happening and the price is pumping.
Can I? Yeah, it really does, right? I'll say this as well. Just give a shout out to the organizers of Bitcoin Alive. It was such a high quality, high signal conference last year, and the thing that I thought was really noteworthy was that there was hardly any discussion of price. Now, the price wasn't an exciting topic at that point in time, but what was fascinating about it was that everyone was talking about the technology, the possibilities, the problems that it solves. You know, it was not what I think an outsider could cynically expect with a bunch of sort of internet weirdos just there trying to get rich on magic internet. It's not about that. So it's going to be great that the price, because people will be more enthusiastic. They'll have some hopium in the veins and everything. But I can guarantee you this: if you think that this, if you're thinking of coming along and you think this is just going to be a massive love-in, backslapping fest of look how smart we all are, look how the money is, it's not. It's actually going to be super signal packed, and it's going to be some very serious discussions on, again, what this damn thing is and how it works and why, you know, we think it's got a crack at like changing the world. It sounds hyperbolic, but I think we all do, right? It's going to change the world, and it's you will find that that's the kind of discussions that are there. So if you can come along, and yeah, can't wait to meet you in person, Dale, and
awesome.
hopefully a few listeners too.
Yeah, brilliant. All right, man. Awesome. It's been great, and good luck with the rest of the house move, eh? And
yeah, thank you.
Yeah, hopefully you're safe and sound by the time we see you in Sydney.
We should be. Thank you.
Thank you.